Good morning, everybody. This is the Live Market Open for Monday, June 6th. I hope everybody had a great weekend. We had some action in markets. As always, we'll cover recent developments, talk about various charts and levels, discuss the next 24 hours. We have one big key event, and we'll also, of course, have your questions. If you cannot see the chat box alongside the screen, you can find it here, tlk.io/fxread-forex-live-video. Okay, and today's special segment will be about dollar CAD, but first we'll cover, of course, the news, and we had quite a bit of news. First and foremost, we had the non-farm payrolls report on Friday. It was a total disaster. We'll cover the details. Good morning, Fabian. Good morning, Mauricio. And now we're seeing some kind of recovery. Okay, we'll talk about that. So let's begin with that. Okay, so non-farm payrolls was a total surprise and disaster. Headline figure was only 38,000 jobs gained. Now, there was some talk, we talked about this on Friday as well, that the number will be lower because of a strike in Verizon that was held. The strike was held during the survey period. Okay, so that's the beginning of April. The strike is over. Anyway, this was expected to push the payrolls number towards 160, 130, 140. I don't know. Anyway, it fell all the way to 38,000. And it wasn't only bad for the time of the strike in April, but we had downwards revisions for the previous 2 months, for February and February and March, to all the way worth minus 59,000. So if you look at, if you take the revisions and the jobs gained, you actually have jobs lost, a negative number. Anyway, the 38,000 figure is the worst since September 2010. Another worrying figure, good morning, Sirik, good morning, everybody, was the fact that the participation rate dropped to 62.6. It's the second month of retreat in a row. In an expanding job market, we all expect to see more people come in. Okay, we expect the participation rate to rise. So the big drop in the participation rate explains the drop in the unemployment rate to 4.7. But of course, this wasn't a silver lining. We can find some kind of a silver lining. We talked about this before, that, I mean, in the past few months, wages have become more and more important. They were okay, 0.2 as expected, and 2.5, 0.2 month over month, 2.5 year over year, exactly like last month. I mean, the annual figure. Good morning, Ed. Good morning, Ramon. So it was, that was okay, but because the headline figures were so terrible, we're back to the same. I mean, they took over the show, and it wasn't about wages this time. Okay. Other figures that we had on Friday. Well, in the UK, services PMI beat with 53.5. Not such, I mean, it had a short-lived impact. Opinion polls have a much bigger impact now. US trade balance released at the same time of the NFP came out a bit better than expected. Of course, it was ignored. 37.4 billion of a deficit. And 90 minutes after the NFP, we had the ISM non-manufacturing PMI. It sort of served as another confirmation of the slowdown. The employment component was very poor. It sort of added fuel to the fire. So the big drop in the US dollar was seen after the non-farm payrolls, and then we had another push to the downside. US factory orders came out okay at 1.9. The ISM manufacturing PMI usually provides a hint for the NFP. This time it was more of a confirmation. Okay, so that was a big move on Friday. Comments here from Ed. Just take an average from previous revisions and apply to 38,000 to get a reasonable figure. It will be changed later as revised. I mean, the change between actual and revised. Yeah. So anyway, it was sort of the US job market, the terrain was derailed, if you wish. But who knows what's going to be. Let's look at the charts and see the reactions. Euro dollar was talking so many times about the frustration about euro dollar, how it hardly moves, moving a bit up, a bit down. All in all, it was trending lower. And then this NFP provided all the volatility we needed, sending it up from support here at 111.30 all the way to 113.73 was the peak on on Friday, so quite a big move in euro dollar. This morning, we're seeing it grind a bit to the downside, okay? Finding support there, the old support line of 113.35, the line that worked to support when the pair was trading on higher ground, so at least euro dollar provide, well, some respect for an old line, okay? Further support 112.50, resistance 114.60. There was nothing to move the euro. We talked on Friday about, well, the Draghi show on Thursday. Not much happened over there. I mean, Draghi was a bit dovish, but nothing extraordinary. So this move is all about the US dollar. As again, today we're seeing some kind of a move back. But well, the crash of the US dollar is much more significant than the recovery we're seeing at the moment. Okay. Another thing I would mention is that over the weekend we had some comments. We had a comment by Loretta Mester of the Cleveland Fed. She said this jobs report shouldn't change the picture, okay, but she's known as a hawk. But this morning we had a comment by Eric Rosengren of the Boston Fed. He used to be very dovish, but in recent months he's been much more hawkish than Yellen and Dudley. Anyway, he said we have to see if this is a one-off or not, okay? So he was very cautious. Perhaps his words give another boost, another support. I mean, they support another recovery of the US dollar. Again, it was a terrible report, but we still don't know how it's going to be, okay? Yeah, so it says no moves until Yellen squawks later. Yeah, well, we heard from Mester, we heard from Rosengren, but of course, Janet Yellen has the biggest say. She'll be speaking at 4:30 GMT. We'll talk about the events for today. Clearly, her speech is the main event. Okay, let's go back to the charts, cover the other charts. The currency that is falling most against the US dollar this morning is clearly the pound. First of all, we have here let's go back to Friday. We have the jump all the way to resistance here at 145.80, so very nice technical behavior from cable, and then it fell down, retreated towards the weekend. In the last hours, found support above 145. A new week began, and we have a weekend gap to the downside, okay, quite a significant gap, and since that gap, we've been falling even further. What's going on in the UK? In the UK, we had 3 negative opinion polls, for the Remain campaign, positive for the Leave campaign. So most important one, well, I wouldn't say most important, but I saw a big swing in the opinion poll for the Guardian and the Observer. It showed a switch from 3-4% lead for the Remain campaign to 3-4% to the Leave campaign, okay? And also polls by TNS and ITV show the same. Show more strength for the Brexit camp. Now, also, if you look at bookies, at gambling websites, they also show a rising chance for Brexit. It's still low, still higher chances that the UK will remain in than out. But clearly, we're seeing now a momentum. We're seeing, I think I mentioned this last week, but again, we had some change in the polls towards Brexit, and some suspected that it was because of the holiday. We had a long weekend in the UK, spring holiday, and that was many young people, which tend to vote Remain, didn't participate in these polls. So the older people that were not on holiday sort of skewed the results towards Brexit. But anyway, this theory, interesting as it is probably wrong, and we do see some kind of momentum towards the Brexit. Okay, now this can change many times until June 23rd. We're 17 days to go, and anything can happen. Okay, but anyway, also over the weekend, another boost for the Brexit campaign. Okay, so here we are, pound dollar percent lower, 130 pips lower. Jax, good morning. Random polls seem to affect pound quite a bit. Yeah, so you can say it's too much, but as we get closer, economic data becomes less and less important, and every opinion polls becomes more and more important, especially as they show tightening. Okay, according to one of the Brexit trackers I'm following, it's 46% in the FT. It's currently 46% to 43%, okay? For the stake campaign, it was 46 to 41. So it's becoming tighter and tighter. I don't think they have the most recent data, but I mean, they don't have the opinion poll here. But let me just show you the previous opinion poll. Not opinion, but Opinium. It's the name of the research firm. They showed a victory for the Remain campaign, 4%. Now they showed 44 to 41 for Leave. So that was for me the most significant move, because it was switch from Remain. From Remain to Leave. Okay, yeah, markets may be moving too much. Maybe are oversensitive, but yeah, that's the way it is. So anyway, for pound dollar, it's further support. Well, currently we're at support 143.70 more or less, and further support 142.80, 142.30. Dollar yen was a big mover. As I mentioned last week when we did the special coverage about the yen, dollar yen often provides the best reflection of the reaction to US figures. So we had a big crash here, undoubtedly broke under support at 108.25, which worked as support back here in May, under 107.65, which worked as resistance. All these lines were broken. Now currently at 107.05, 106.90 is some kind of support, but I think dollar yen is still looking for a direction. This morning the pair is rising, this recovery of the dollar. But as you can see, the recovery of the dollar against the yen is smaller than the recovery of the dollar against the pound. Okay, anyway, 105.50 is key support, 107.65 resistance. Dollar CAD, we'll have a special segment about the Canadian dollar later on. We're seeing it fall. Well, dollar CAD is falling back under 130. The move is fully driven by the US dollar. Nothing of importance from Canada. I think we had trade balance, but it didn't really matter. Anyway, 129.10 is the low we've seen on Friday and also last week. So it's a double bottom there at 129.10. 130 remains resistance. Okay, and 131.70 is higher resistance. Aussie dollar had an excellent GDP lately, but it couldn't break above 73 until the NFP, and we're now back to the higher range, 73 to 73.75. Okay, further resistance 74.40 and 75, support 72.40, I would say. Anyway, this NFP sent means, well, bad news for the US means no rate hike, and no rate hike means more risk currency, the Australian dollar, and here we are at the high range. This was the fuel that provided the breakout. Okay, same goes for Kiwi dollar. We reached resistance here at 69.50. We had Kiwi dollar sort of struggled with 68.40, which was this sort of double top here. We fell to much lower ground, and then a recovery. Of course, recovery that was limited, was capped by this line, and boom, with the NFP went to a much higher range, and now 1650 and 70.50 work as resistance. Support awaits at 68.80. Okay, now let's talk about some crosses. Well, not crosses, dollar Swiss. Also here, reflection of this weakness of the US dollar. Boom, we fell to much lower ground under the 98 level. And yeah, further support 96.40, I would say strong support, resistance at 98, 98.50. Euro Swiss, well, basically in the same spot, closer to 111 instead of 110, but hardly moving. And pound, euro pound, clearly moving higher on these opinion polls, which have a big effect also on the euro against the pound. So 0.75% higher this morning, reaching resistance at 78.30. Closer to 79.30. Well, so far we've just touched above the 79 level. 78.30 is support, 77.40, and 80.25. So again, I believe that if the UK leaves the EU is also left out. It's bad news also for the EU. It's the beginning of the end, not just something the UK can opt in and out and will always be there. It will not necessarily always be there if the UK leaves. This has an effect. It's not isolated. So I believe that if the Brexit pulls, I mean, if we have higher chances of a Brexit, the euro will also feel the pain. So far, it's clear that the pound is more on its own against, well, with Brexit, but this can change sooner rather than later. Okay, euro yen. Well, the yen moved to the downside. Sorry, the yen moved to the upside. That means that euro yen moved to the downside. We're seeing some move to, well, some recovery this morning in euro yen, 121.70. So the euro is showing more resilience against the US dollar than the yen this morning, and this sort of pendulum swing to the other side. But this comes after we fell under 121. Okay, so that's quite a low level for this cross. Yeah, actually, the low, well, haven't followed this cross for quite some time, but actually we're at the lowest level since late 2013. Sorry, early 2013. Did not see that coming, was not following this pair closely. Anyway, 120 is a very round level, of course, but the next line of support is 118.40, and these were low lines seen in March and April 2013. Okay, just when the Bank of Japan began its QQE program, the huge easing by Kuroda when he just came into office. Okay, so very low levels for euro yen. Mostly reflects the strength of the yen that we're seeing lately. Pound yen, okay, so this is daily chart, quite a big move to the downside. We had it fail in its attempt to break above 163.80. Perfect technical behavior. This rejection is already worth over 900 pips to the downside, and with a combination of a stronger yen on the NFP and the crash of the pound, you can see how the non-farm payrolls was much better for the yen and less for the pound. So 154.40, it's a line of a battle line here. Further, well, resistance at 155.80, 156.60, and yeah, further down we have 151.85 here. Okay, and let's talk about oil for a bit. We had the OPEC meetings last week. Lots of smiles at least, but no results. WTI crude oil is keeping sort of distance under 50. I believe we can top the 50 line, but I don't think it'll go very far. Still a bit of oversupply in the world. Yeah, so I would say, yeah, this line may be a bit obsolete. Yeah, I would say somewhere here we have support, 47.70. Okay, that's WTI crude oil. Remember that in oil there are many benchmark indices. Okay, any questions? No, not now, at least. Let's okay, let's show you this. Chances for rate hike. Oh, it's still don't think it's updated. Let's refresh. Of course, the chances for rate hike in the US fell quite a bit. Yeah, so 4% chance rate hike in June. I think it was never going to happen anyway, and Brexit would be one thing. But if the Fed is truly data dependent, well, the NFP has provided all the data needed. But also for July, things have changed. It was sort of around 55, 58% chance of rate hike. The immediate reaction to the NFP was fall to 40%, and now it's only something like 30, 33% chance of rate hike in July. I think markets, well, taking a tangent from what Jack said about the opinion polls in the United Kingdom, I believe that also the reaction to the NFP is a bit exaggerated, and July could still be on the cards if we have no Brexit, if we have upwards revisions in NFP. I mean, it's not over yet, so I would expect the chances to rise. And well, it's all data dependent. If we do have a Brexit, of course, it's off the cards. Maybe we'll even have a rate cut in the US. But anyway, these are the chances for rate hike. According to markets, September is more like 50-50. I don't think there's a good chance for September, even though we have new forecasts and a press conference. That's because we're just too close to the elections. So is November. In December, the markets do price in a rate hike for December, and that makes sense to me as well. That's after the elections. Hopefully not after Trump is elected, but who knows? Anyway, other things to watch. Okay, we talked about the events on Friday. It was basically all around the NFP, with the ISM non-manufacturing PMI giving the second boost. Today we have German factory orders. They came out earlier today. They came out with a disappointing drop of 2%. Okay, and the internal data, this might be an anecdote, is that there is the domestic demand in Germany, and the problems come from external demand from China mostly. Okay, so perhaps paints a picture about the world. At 8:30 GMT, we have the Eurozone Centix Investor Confidence. Let's look at the fixed week calendar here on Forex Crunch. And we're expecting a small rise from 6.2 to 7 points in the Centix Investor Confidence. Okay, it's not such a meaningful event. And the big event for the day is the speech by Janet Yellen. She'll be speaking in Philadelphia. Let's talk a bit more about that. Janet Yellen, the chair of the Federal Reserve, in the past, she's shown her dovish side over and over again. Each time during the months of March and April, we had other Fed members becoming a bit more hawkish, a bit more optimistic, talking about 2-3 rate hikes, talking about inflation picking up, about robust labor market, about strong US economy, sort of seeming that giving us a message that we're going to have rate hike very soon, the second rate hike. And then Yellen came out and sort of, especially at the end of March, painted a very, very dark picture. She did surprise us 1 week before the NFP. On Friday, in a speech that was not supposed to be about monetary policy, Yellen came out and did talk about improving conditions, that inflation will pick up, and that we'll see a rate hike in the coming months. That gave markets a hint that, okay, June is off for Yellen, which was not such a big surprise, but that July is certainly on the cards. This speech last Friday was not expected to be about monetary policy. All eyes were on this speech today, on June 6th. But the speech, of course, today is very important, especially as it's going to be a reaction to the NFP. My tendency is that she'll be dovish. She'll take the opportunity not to raise rates. The Fed wants to go as slow, as gradual as possible. Okay, and she'll, of course, say that it was disappointing, and that we'll have to wait and see, move step by step, something that will be relatively not fully committed, but very, very dovish. That's my tendency. She can also surprise by siding with Rosengren, which said it could be a one-off. I mean, it can always be a one-off. You never know. And sort of provide the hawkish case. If she does go hawkish, I think there's room for the US dollar to rebound quite a bit, because the move to the downside was a bit extreme. But my tendency is that she'll be that what we're seeing now is a correction in the US dollar after the big move on Friday. And when Yellen opens her mouth, more correctly, the speech will be released to the public. The headlines will come out before she actually takes the microphone. And that's at 4:30 GMT. Then the US dollar I believe will take another slide. Of course, her words are always going to be data dependent. We have to wait and see, risks up and down, and on one hand, on the other hand, it's not going to be a very, very clear message, okay? Yeah, that's it. Other events for, well, the last event is not actually today, it's actually tomorrow, early morning, a rate decision in Australia. So the Reserve Bank of Australia is going to make its decision. No changes expected. That's a spoiler because, well, GDP came out better than expected. Internal Australian figures look okay. China looks relatively stable. Their bias, I believe, is still to cut rates later this year, but not now. Okay. I believe that with the recent strength of the Aussie dollar, at least from Friday, that we'll have some kind of a dovish talk. Especially, they're going to talk about the strength of the currency, how it's undesired, unhelpful ways in the Australian economy, etc., etc. And yeah, so but no rate cuts. So perhaps, I mean, if we'll see a rate cut, of course, we'll see the Australian dollar plunge, because that's not priced in with the recent data. And the Reserve Bank of Australia did surprise us a few times. Okay, so it's not rare, but I wouldn't expect that. If the Reserve Bank of Australia, if Glenn Stevens and his colleagues are relatively optimistic and not complaining too much about the currency, then we'll see another move to the upside. I believe they will complain about the currency, and they believe that's already priced in. Okay, so that's at 4:30 GMT. That's 6:30 here in the old continent. And of course, we'll talk about it in the show tomorrow morning. All right. Yeah. Question from Jackson. Any clue what Yellen will say today? Well, that's what I talked about. She'll say on one hand, on the other hand, but I believe the message will be dovish. Okay. Now let's go do the special segment about the Canadian dollar. Our 5 points today about dollar CAD. Well, the first and most obvious thing, Canada is an oil exporter, and the Canadian dollar moves a lot on oil prices, especially in the past year and a half or so since the big plunge in oil prices, certainly moved the Canadian dollar. I would mention that sometimes the correlation is stronger and sometimes it's a bit weaker, okay? So when we have bigger moves in oil prices, then we have also a tendency of the Canadian dollar to react more to oil, okay? And ignore domestic data. When things are very, very stable, then we have internal data such as trade balance, jobless, the employment report, housing figures, wholesale manufacturing sales, you name it, GDP, which is released once a month, okay? Yeah, all these have moved the Canadian dollar more, okay? But oil, even when it doesn't have a big impact, it can show us the relative strength of the Canadian dollar. What do I mean? In many periods, especially in the last few months, we've seen sometimes a vulnerable Canadian dollar. Each time that oil prices fell, Canadian dollar tumbled down, okay? But at the same time, when oil prices did recover, did rise, the Canadian dollar hardly moved, okay? This can tell us, this can give us a clue about, in this case, the Canadian dollar is vulnerable, so that when we have also news indicators released in Canada, GDP, for example, jobs report, we have a tendency for the Canadian dollar to look for something bad, okay? So if we have an okay jobs report, when the Canadian dollar is vulnerable, the Canadian dollar will suffer a blow, okay? And on the other hand, when the Canadian dollar rises with oil and sort of slides in oil prices, we can expect the Canadian dollar to look for the good things in the data. When things come more or less as expected, the Canadian dollar can rise. So the second point in our 5 points about dollar CAD is that oil can serve as a measure of strength or weakness of currency. Another characteristic for me for dollar CAD is that it's a bit slow, and that's a good thing. It gives the discretional traders, the ones that are reading the data, analyzing it, and then reacting, gives more time to react. Okay, we've seen it many times with jobs reports. Of course, we had an initial reaction of if it's a good jobs report, initial jump in the Canadian dollar, but then we had a follow-up. Okay, it wasn't like in the NFP that we see jumping up and down. Well, not this Friday, but sort of we've seen movements extend and move sort of very slowly, allowing traders to jump on the bandwagon. Okay, and that's a bit different from other currency pairs. That's what I've been observing. Point number 4 is when trading news figures, news releases in Canada, you should always look at the calendar to see if there isn't a US figure at the same time. So most indicators are released at 8:30 GMT, 8:30 Eastern time, which is also the main time zone of where most of the Canadian population is, in Toronto, Ottawa, Montreal. Okay, and things used to be a bit different. We had, for instance, the jobs report released usually on the same day with the non-farm payrolls in Canada, but an hour and a half earlier. Okay, so instead of 8:30 Eastern time, it was released at 7 Eastern time. That means, that means instead of 12:30 GMT, it was 11 GMT. Okay, and that allowed some time for reaction. Now, in many cases, we have the releases at the same time. Trade balances always together. All these countries trade a lot with each other, and also other figures in general. What we do see is that the Americans usually are more eager to get the jobs report out as soon as possible, like we've seen this Friday. I mean, always the first Friday of the month. And in Canada, sometimes it's the second Friday of the month. So, for instance, this week, the Canadian dollar has the full stage to its own, and we could have a true reaction. But in many cases, when we do have both figures released at the same time, it becomes messy. And if there's one pair not to trade, when we have these double features, that's dollar CAD. And a comment about technical behavior, because we talked about this. I mean, I was bashing euro dollar for technical behavior, and there are some currency pairs I do like. So I would say the Canadian dollar is sort of medium. It has better quarters, it has worse quarters. I think in recent weeks it's okay, but it's sort of not, in generally speaking, it's not the best of currencies, not the worst, okay? So, yeah, so you could enjoy a slow reaction to news releases, but don't expect the technical levels to always be respected. Well, no currency pair respects all levels, but yeah, but in any case, the Canadian dollar is sort of somewhere in the middle. Okay, so that's a special segment about dollar CAD. Maybe we'll look, if we talked about this, talk a bit more about current levels in dollar CAD. Well, I just talked about its mediocre technical behavior, but this double bottom here at 129.10 is very clear to see, touched on Friday, and a very nice technical behavior, right? But yeah, this 130.80 line, which worked for quite some time, is now was shattered, was eaten in both directions. Anyway, I would say that 130 remains a very strong line to the upside. Okay, 127.50 is a strong line to the downside if 129.10 is broken. And I don't think it appears here on the hourly chart. For some reason, my charts are moving a bit slowly this morning. But on the daily chart, we can see that 133.10, if I'm not mistaken, is a strong line of resistance. Okay. Some Monday blues for my charts here. Not reacting. I was talking about the slow reaction in dollar CAD, and Also this trading view chart. Maybe I should restart my computer. Anyway, so that concludes our coverage special segment today, special column, if you wish, on dollar CAD. Okay. Any questions? Any comments? Let's talk a bit more about, well, just recap. Talk about other events we have this week. Just to, we always do a preview on Friday. Let's just do it quickly. Today we have a Janet Yellen speech, key event for the day, perhaps for the whole week. We'll have more stuff, of course, I'm sure, during the week. Tomorrow morning, the Australian rate decision. So that's basically in the next 24 hours, these two big events. On Wednesday, oil inventories, as always. I'm looking to see if we have a rise in production in the United States of America, and the RBNZ rate decision. Okay, so we have rate decisions from both Australia and New Zealand this week. On Thursday, there was a speech by Mario Draghi. Let's see if he provides more fireworks. I was a bit disappointed by his appearance, and well, I wanted him to move markets a bit more. Or at least we had the NFP for that. And on Friday, Canadian jobs report. You can test my theories, see if they work on Friday, and consumer sentiment, which is sort of has the last word on Friday before markets close. Okay, so these are the events for today. Sorry, for the whole week. Yeah. Let's see if we have any update on those Brexit polls. In any case, the campaigns in the UK, there were lots of talk shows over the weekend, and things are becoming a bit more nasty there. What they call a Tory civil war within the Conservative Party in the UK. Maybe there was some kind of a positive opinion poll, because now we're seeing pound dollar bounce back up some 50 pips or so. I'll check out to see if we have. Oh no, it's also, yeah. US dollar is weakening once again. Perhaps this correction is over. Let's see, because also euro dollar is a bit higher, and no, it's hard for me to. No, it's a bit more messy. Anyway, for the Remain campaign, there's fear that not enough left-wing voters will support Remain, because they are not such big fans of the EU and do not enjoy voting for Cameron. I mean, in a way, and for was some fear of complacency in the Remain campaign, but now I think it's over with these recent polls. For the Brexit campaign, their fears are that they focus a bit, perhaps too much, on immigration, and they're painted as racists. Anyway, it's an interesting debate. For markets, what we need to know is that we had in early May more support for Remain. I mean, we had strengthening of the Remain campaign. Now we're seeing a strengthening of the Leave campaign. Regarding Brexit, was the pound in better or worse before the euro? I'm not sure I understand the question. Anyway, now there's a consensus within the British public and among economists, even the most pro-European ones, that it's good that Britain stayed out of the Eurozone, okay? With all the problems in the Eurozone. Remember what happened to Greece last year? It also, nobody's suggesting to join the Euro in any case. The question is the European Union, in or out? Free movement of people. immigration, sovereignty, economy. I think the Remain campaign won the economic argument. It's better to stay in than out, although everything is debatable. And the Leave campaign is winning, of course, sovereignty argument. That's easy. And immigration remains battleground, I would say. If to sum it up a bit in an abstract way, simplification, if you wish, okay? Okay, let's do the wrap-up for today. This is the wrap-up for the live market open for Monday, June 6th, the 6th day of the 6th month. We have a big NFP fallout. The US dollar was hit very, very hard and is trying to recover. But it's a bit tough. The losses are quite huge. NFP was bad. First of all, in the headline figure, first and foremost, the headline figure did dominate once again. And it wasn't the wages. Terrible gain of only 38,000 jobs. Downward revisions worth 59,000. So bottom line, net loss. Worst jobs report since September 2010. And a drop of the participation rate, which means that less people are joining the workforce, but on the contrary, leaving them. Wages, that was the silver lining. They were okay, but it wasn't enough with the shocker headline. The impact of Verizon is unclear, but certainly not enough to push. It wasn't that terrible. Other figures on Friday, we had most of them were as expected. The ones, the one that did have another impact, devastating one, another blow for the US dollar was the ISM non-manufacturing PMI. The biggest sector in the United States, the services sector, is slowing down. Okay. Today we had the miss on German factory orders. We have the easy Eurozone Centix investor confidence. And the big event of the day is a speech by Janet Yellen, the chair of the Federal Reserve. The big question is, will she see this or be cautious and say it's a one-off, and like one of her colleagues, Eric Rosengren, said, or she'll be her dovish self, and now she has a good reason to be dovish with this terrible report, and express worries and sort of give us a hint that rate hikes are not coming anytime soon. My tendency is that she'll go to the dovish side, and what we're seeing now in the US dollar is more of a correction before the next leg down, but you never know. She did surprise us last time with more optimism than we had expected. At 4:30 GMT tomorrow morning, we have the Australian rate decision. No changes expected, but they'll probably raise their rhetoric against the strength of the Australian dollar. If they do surprise us with the rate hike, and you can never discount the surprises from the RBA, of course, the Aussie will fall. Current interest rate in Australia is 1.75. Okay, so we talked about all the events we had and we're going to have today. Euro dollar, I see your question. What's the line of resistance for euro dollar? So euro dollar is currently bouncing off 113.35. To the upside, we have 114.10 as weak resistance. Let me try to show you. My charts are moving a bit slow. The next line of resistance is 114.60. And then 116.16, okay? These are levels that were tackled quite recently. That's why I look at them as resistance. Low support at 112.50. What's the impact of the Fed chair speech? I think it'll be a big impact. This speech is going to be about monetary policy, the speech in Philadelphia. And it'll be a reaction to the non-farm payrolls. I think towards the event, we'll have a bit more tension, and then we'll have a reaction. Even if she doesn't say anything, I think markets will move. So again, my tendency is that she'll be dovish and the dollar will fall, but you never know. That's why I think markets will remain tense and on the edge and waiting for a speech. Remember, if I'm not mistaken, the text of the speech is released at 4:30 GMT. And so you don't really have to listen to the full speech, or the headlines will be out there immediately. Okay. Anyway, pound dollar, bad opinion polls. Bad for the Remain campaign, more momentum for Brexit, and the pound doesn't like it. Now we're seeing some kind of a bounce, okay, similar to the bounce in euro dollar, but the pound was hit hard, including a Sunday gap, 143.70, 142.80, 142.30 support, resistance 145, 145.80, 145.80 worked very well. Okay, this is certainly, the focus on the referendum, and there's every opinion poll moves markets, which remain on edge. Dollar yen, one of the best reactions to the NFP, and now quite a recovery. 107.65, 108.25 resistance, support, 106.90 weak resistance, and 105.50. Dollar CAD, the highlight of our special segment today. Very, very nice double bottom on dollar CAD at 129.10. Okay, we reached that level on Friday once again. 130 is resistance, further resistance 131.70, and low support 127.50. Let's continue with Australian dollar ahead of that RBA decision tonight. Early in the morning, we broke above 73. 73.50 is the next level of resistance, okay? And we got close to that level on Friday. Further resistance 74.40 and 75. 72.80, 72.40 is, very strong support at 71.40 if we have a rate cut tomorrow morning. Kiwi dollar also enjoyed the weakness of the US dollar, reached resistance at 69.50, and support awaits at 68.80, followed by low support at 66.70, high resistance, the double top of 70.50. Okay, so I guess, and also in the wrap up, we covered everything we had to talk about. Lots of volatility in markets. It was sort of an outburst on Friday. I hope this continues today as well. No holidays like last Monday, so no reasons for markets not to move with Brexit and Yellen and everything. Thank you very much, everybody, for coming. Thank you, Horst. Thank you, Sirik. Thank you, Dan, Jax, Ed, Ramon. And if I missed a way, thanks, Mauricio, for moderating the show today. And so that's it for today. I wish you all a safe and successful day in markets. Trade responsibly, and see you tomorrow. Thank you, and bye-bye.